we're still in a buy-side delivery program, higher time frame. Yeah, it was these lows that were formed here. That was a very important low. I would have liked to have seen that behave in a turtle soup manner to react up the old low and to continue the uptrend of the buy-side delivery program. That should have given us a 20 to 40 handle stop loss, but because it wasn't tied to any form of leftover liquidity or any session, it made a really low probability for it to react from it, like in sort of soup manner. So we saw this reaction going down lower, and now we have this new anchor, which also is not. I don't think it's also aligned with a. Yeah, it's not really tied with any form of liquidity. So, uh, as much as it's still in the buy program and can continue up going higher, just continue seeking sell side. This is also a very weak low, and we could also have traded through it and possibly aiming down for even lower prices, right? Because we're still in this month, so it can still continue to head back down to the. I mean, we're also approaching the monthly open as well, so it could probably head down even down to the high here of June 30th, if it wants to continue going down lower. What I do like to see, however, is a miniature sell program. So again, creating up that high, ranking up to here, via SMT, cracking correlation, sell it short. Discount, discount, discount. Okay. But something also to be wary about is that we have FOMC meeting minutes at 2 o'clock today. So we could even have like a very, very sloppy AM session. Might even have to hold up a little bit after PM to get into something good. And now this balanced price action will be referenced for the hour to go up. I'm going to type that. Okay, but where is the actual true bullish mitigation block? Well, if we're going to use that bullish mitigation block, where will we be aiming for? Tuesday's pre-market buy-side liquidity. The actual real block lies right here. So we have a high to low, right? What's the last buy candle that started this sell delivery? Right here. So we'll take a look at how it opened up at 9 o'clock. Okay, 3, 2, 1, 0. Okay, immediately traded below the bullish mitigation block, closed down below it, repriced up. Look at the wicks, how they're being contained inside this, and then immediately sold lower for an inverse PD array. If we're not gonna aim this, where could we be aiming to? These lows. Now this is a dealing range, right, in the form of a breaker. So these buy side right here, it's a little breaker. Why? Because it's our last form of buy side delivery before the big sell. That created this low was lower than this low in this certain time frame of time. Okay, so it's definitely spending time. And look at this bullish breaker. So we wick down below it. So that's interesting to see if price will continue to support that bullish PD array, discount array. I am going through a lot right now, so I'm gonna close this up, this stream. Um, wow, what a crazy expansion day! To think that price reacted back up to that dealing range, low to high this morning, in the form of a type 2 dealing range. So we anticipated a reversal. But if we're not going to hit that buy side liquidity pool, where else could we be aiming for? This morning, we opened up just above the Asian buy side liquidity pool, right above it here, and it immediately sold off with rejection. I want to, if we're not, that's already giving you hints that price is not willing to go up any further, right? Because we had structuring. First of all, well, let me take a step back even. We had this bullish breaker, and it was spending a lot of time here consolidating and whatnot. And on top of that, we also had a breaker up here, and the price was spending a lot of time on it as well. As soon as 9:30 opened, immediate rejection on the 15 unit type 2 dealing range reversal, right? What should have been a reversal to keep going upwards, right? It had all the supporting structure, bullish PD arrays, this gonna raise a framework that should allow for a reversal, but immediately 9:30 came up, boom. That's already indicating a hint that perhaps we're not going to be going up further. As well as I saw the first presented fair value gap that happened here around 9:31. Literally, if something I've been learning about my back test is that if we can use the first presented fair value gap to aim for a liquidity pool, if it's not going to go up there, right, where else can it go? There's literally nothing else that has been referred back to. So you probably have seen me like even zoom out for a moment out of the higher time frame perspective to look where could we be heading for, because there's these lows have already been referred to, and I would have liked to have seen them act as a turtle soup, which is why you saw me enter on a demo trade here for turtle soup higher. Notice that it went into discount and then expanded up higher, only to react from more premium PD arrays. Look at that fair value gap is SIBI, and immediately expanded even lower further. So then I was like, oh snap, this thing's gonna keep going down the bed. Where could we be heading toward to? So I zoomed out and I was referring to all these liquidity pools, and I saw this one, Monday pre-market sell side. I was like, this has got to be where we're trying to head at today. Uh, where we're trying to go. Not sure if we're going to reach there today. I would like to see it today, see if we can get into an entry. And the amount of setups that I saw in this consolidation range just to get to that level, I mean, it's insane. I mean, it's like a lot of setups. Well, maybe like two or three, but still, two or three scalps that you could have taken that could have netted you a couple of handles. Let me see here. If I can just mark this down here for Monday, August 4th. I believe it was the 6 o'clock. Yeah, I believe 6 o'clock. So we'll mark that here. So this is where I believe price is trying to go. So we'll go back to the 1 minute. And look at that. Look at this rejection. Oh my gosh. The amount of teasing too. I don't like these kinds of conditions. So you saw the amount of breakaway gaps that I was anticipating. Okay, we're gonna head down lower. This guy's probably showing a lot of speed because it's not even rebalancing these inefficiencies, right? So as soon as we had that 15 unit time cycle open up again, this was like around I think 10:15. I saw, okay, you know what? This thing's not gonna respect things going down further. So what you call it? I saw this SIBI that would have been a nice setup for you to take a trade. So let's mark that here. Because if it's not going to be respecting any other inefficiencies or treating them as breakaway gaps, I would like to see this inefficiency be respected to aim down lower, down here. Okay, so that's one trade idea. Second trade idea is the retracement going up. So what's balanced? Take a look at this wick. Whenever we're looking for first percent fair value gaps and we have a setup like this is kind of like where I learned this from, right? Look at the swing low. So we have a sell side delivery, buy side delivery going up. This is balanced. We had an efficiency here that's on the same leg as the sell side program. So this SIBI here is part of this sell side delivery program in a place where it's balanced here. This, to me, is a balanced price range. If it was a busy, then I would have considered it. But this is a SIBI. But look, we have a busy up there too, but it's higher than the balanced price range now. So if this is balanced, we're gonna take this swing. Look at how much time price spent above it. Up here, 1, 2, 3, swing high, broke below that swing high, and immediately, boom, another trade right there. Why? Why another short? Because we're looking for it to target this pool of liquidity down here. All right, down there. Okay, and as it's going down lower, what other setups or like how was price behaving up in those levels? This was initially a little bit scary, to be honest, like seeing that retracement back up from this reversal, and that's why you got to take partials, man. So like, look, when you had that swing low, expanded down lower, okay, little retracement up, you take a partial there, or another swing low here, As it's retracing back up, you leave a partial here so that when it retraces down to this area, you're gonna be taken out here. Oh boy! And then as it was consolidating here again, I'm considering, okay, what other balanced price ranges are there? What other breakaway gaps even? So once we had traded down aggressively lower, I saw that it was respecting this high of the civvy. So I was considering that as my breakaway gap again, and then seeing how price was consolidating here. You wanted to take, this is an ultra short-term scalp, by the way. As soon as it's expanded down here, that's your order block. So order block down here. Okay, you would have entered up at the high as soon as it was entering the market, and then sell that short down here. So now we're looking for it price to keep going down lower, lower, and lower. Eventually, seeing to see if it's going to sell, if it's going to reach for these sell stops that are resting here, which is based out of a level from August 4th. So if I go back here, see, so on futures, you see how we're like so close to tapping it. I believe we've already tapped it here on futures, but on CFDs we have yet to. So that's another idea there for another time. But the amount of times that price was just giving me those nasty setups to head down lower, I mean, it was on. It just doesn't, whatever. So yeah, so we're trying to reach down to these lows, which is the same lows that we see here, but this is on CFDs. And we're looking to see if price will eventually reach down there to that level, which it did on futures. And yeah, that's what I was looking at. And as it's going, I mean, time cycles are repeating. Something to support the short on this idea is once that new 15-minute time cycle, I didn't update it here because I saw it visually, but on my eyes, what do we have? High to low, lower low, lower high. That's a bullish breaker, no? And if it's a bullish breaker, shouldn't it help price to push it up further? Ideally, right? Because there's a bullish PD array. So let me set this up here. Let me set the stage. There we go. So 25. There we go. So this was my bullish breaker, right? As soon as the new 15-unit time cycle began at 10:30, look at this. Not only was it a breakaway gap, but look at how many times price was inside this little, from the opening to the medium threshold of this breaker, right? Because this is my area of, or zone, where that is balanced, but the breaker is up here. Why is this the candle that's the breaker? Because this is the last buy candle that started the sell side delivery program down here to break this low. See that? So as price was consolidating up here, I was looking at both the breakaway gap and the bullish breaker that's now traded through it and now should be treated as an inverse bullish breaker. See that? So as price is consolidating up here, it's supporting the idea that perhaps we are not going to return to this level and we're not going to return to this level. So in a way, it kind of gave me confidence that we want to see it go down lower. And then we had this expansion, right? This expansion down lower. That's where I got to that order block. And then we wanted to see it sell further to reach down to those sell stops. And eventually it ended up hitting the water and whatnot. And now we're having this sort of reaction. So it's just, oh boy, just higher time frame, resistance, liquidity run conditions again. You know, it's, you got to be really tricky. And it's really hard to sell in these areas because we're on the discount side of this daily range. You don't want to sell here, and this is just straight up really, really tough. But yeah, so we'll tap it here on the low, and now we're reacting up higher, seeing that. And then later, we got FOMC, so that should be very, very interesting. So you wouldn't have even been able to be here to trade today, because ideally you should be waiting after the FOMC, but because we're ultra scalpers and we want to get in there and seeing what kind of opportunities we can find, the market provides a lot of opportunity. And now seeing where these liquidity pools rest, if it's not giving you evidence that it should be going up there, reverse your idea. ideally I would have wanted to see the buy side liquidity get taken, right? To finally form that miniature sell side program so that we can react off SMT and then sell that thing low. But instead, it was giving me hints that listen, it's not heading up there. Every opportunity is being given to go up there. It's not taking it. It's expanding down lower, especially after the 930 candle. So you could have taken that first percent of fair value gap, aim it down to that low, because that's the nearest low that has been referred back to by the algorithm. So that's all that's left. And look at the sudden, you know, rock that just landed here. Um, yeah, I mean, all these loads were already referred back to in one way or another. So that's why um, trading in these kinds of conditions is very tricky, because there's no set plan right now at this time where there's no clear indication of where price was to go. Hint, hint. But with the balanced price range theories, um, which is a theory that I've been studying, which is based out of the concepts that I've been learning. Um, that's kind of like how I've been trying to read the markets. And sometimes it gives you kind of hints, like it did today. So it's trying to head down lower. And now, what opportunities lie? That's where you have to search up your actual PDRAs, like your breakaway gaps, your measuring gaps, your fair value gaps, everything, and seeing how that would be used to rebalance the inefficiency to head down lower, while taking risks on the trade, taking tiny, tiny risks. And